December corn 9.25 lower on the week. November beans are down 64.25 on the week. September wheat is down 39.75 for the week.
Well, hello everybody. Welcome back to the Comstock channel. I'm Marlin Bowling with you. It's great to have you with us as we wrap up another trading week. We're going to be talking about all things that are related to the ag commodity markets, including the new USDA WASDE information that came out. And of course, that came out at mid-session. So we can actually talk about how the market reacted to those numbers when they did come out. I want to make sure to remind you to like these videos and subscribe to them by clicking on the bell icon below and share these videos with others. My goodness, we appreciate you sharing these videos. That's how we have grown to be one of the fastest growing ag-related podcasts out there. And it's all thanks to you. We appreciate your support. And I want to remind you that a lot of you have been joining in the conversation in the comment section below and keeping us informed on what's going on in your neighborhood. How are the crops looking? What do you think about the markets and that sort of thing? So enter your comments down below, and we love seeing all the feedback, and everybody can kind of interact on there too. My special guest today, Eric Relph of Comstock Investments. And Eric, we had the WASDE report that came out at midday today. The markets kind of had a mixed reaction to that. We'll get to them in just a second. I'll just kind of recap. The corn was just slightly higher on the nearby contract. The wheat was under pressure. Soybeans kind of bounced off of their earlier lows. I would like to maybe bring up some of these numbers and get your thoughts on what happened today. So I want to begin by bringing up, first of all, let's take a look at the U.S. crop production. On the U.S. crop production numbers, here's the table for our viewers at home. And if you want to go through these numbers here, if you would, and explain item by item, what those numbers meant to the trade today.
Yeah, so the crop production numbers weren't any big surprise. I think probably the biggest surprise in my mind was that the trade was looking for a reduction in the corn and soybean yields in this July report, and that's just not something we typically get. The July is still one where they will stick to trend line. They will stick to the June 28th acreage report, and that's what we saw. And so crop production, kind of a moot point, still sitting at a 181 corn yield estimate and a 52 soybean yield estimate. Not a big market mover there. That's the one that comes out first. And we saw very limited reaction from the market at the time of that release. So nothing there to really move the needle. And I think that was going to be the case no matter what. And the expectations of anything different were probably the only surprise in my mind.
That's a look at our crop production numbers. Now let's go ahead and go to the ending stocks numbers. Do you want to start with the old crop numbers, or what would you prefer?
Yeah, let's go old crop.
Old crop ending stocks, and here they are on the screen. Let's take a look at these. Eric, what do you think?
This is where the surprise was, and this was the best that we could have dreamed of for today. Yeah, that if you look at the range of estimates leading into this, you had a 1.9 to 2.2 estimate. The average trade estimate was 2 billion, 2.05 billion, but you come in at a 1.87. So you're talking 200 million bushel difference there on that old crop, and the trade really didn't react like I thought it would. You saw, so again, the production numbers come out first. Market's fairly muted, not much reaction there. Then you go to the ending stocks and you start to see some movement. Corn comes well off the lows, trades into the green, and we're trading a penny and a half, 2 cents higher when these numbers start popping out, and then we're looking at 4 or 5 cents higher right away after that. Soybeans, similar type market action at the time, and almost unison movement at that time as well. The numbers are a lot different. Because obviously the soybean stocks are a lot smaller. We went from an average estimate of 356 to an actual number of 345. And that was a reduction from last month, and we were expecting an increase. And I think that was due to a revision to exports that we're unwilling to give on old crop. But this was the one that really, this was the one that should have moved the needle a little further than what we saw today.
On the new crop carryout, this would be for the U.S. On the screen right now, we have corn at 2.097 billion bushels. Was that a surprise? Is that a bit lower than you thought?
Yeah, you take 200 million off the old crop, and you don't change your new crop estimates, as far as the production estimates, which we already talked about. So ultimately, you take 200 million off your new crop carryout. And again, this is something that should have moved the needle quite a bit. You're talking about a 10% reduction in ending stocks. And, yes, we finished off the lows, and yes, we were higher for the day in the corn, but not the kind of reaction we hope to see out of these kind of numbers. Soybeans, the numbers were more muted. The market reaction was more muted, and then we couldn't even hold positive trade to the finish, even though we did trade positive following the report. Couldn't hold on to that to the finish line. Wheat stocks, this was the plaguing one. We were clear at the top end of expectations at 856 million. The average trade estimate was 787. The wheat has some trouble, and it is fundamentally driven, and we saw the market reaction there today.
So talk to me about that corn stocks number.
Mhm.
How does that tie in with the high acreage number that USDA had? How did they justify those two there? They dropped this, but they raised their acreage. I mean, something has to give. They're going to have to come down, right?
Yeah, so you would think, yeah, and that's what we saw with the old crop today. I mean, you go from 2 billion to 1.8, and now you've gone from 2.2 to 2.0, and last month was a 2.1. Well, then we had the increase in acreage, but they really adjusted U.S. demand, both in the feed and residual and for export sales. So you're talking an additional 750 million bushels going to feed and residual usage, and an additional 75 million bushels going to feed and residual, and an additional 75 million bushel going to the export program. So there's 150 of it right there. And then the rest is just filling in the blanks wherever they push the numbers around.
So basically, they're saying, pay no attention to that acreage number we had a while back. Pay attention to what we're doing right now, and we'll catch that up down the road, maybe next year. I mean, is that what they're trying to tell us right now?
That's how they work. And that's how we've seen it happen before. We had expectations for huge acreage numbers in years gone by, and if there's going to be a revision to it, the earliest you would ever see it would be the September quarterly stocks report, and typically it's the following January crop report, and that's the best case scenarios is in that September to January timeframe. There's been times where it's been over a year.
So it seems to me like this is kind of what I used to call the fudge factor from USDA. They came out with the acreage numbers, and they know they can't really justify it, so they just kind of pick it up somewhere else and try and make the balance sheet at the end all come out the way they want it to be.
Yeah. It's like doing a short version P&L. It's real easy to make it balance out if you just plug the right number in the right spot.
Kind of a shell game, if you will.
Exactly.
World production. Here we go. All right. So let's take a look at these numbers.
Yeah.
And first of all, of course, we're looking at South American production here on the screen. What about Brazil? There's been a debate all year long about them and CONAB not agreeing. Now what?
Yeah, and it continues. They didn't even move the needle at all. They were, average trade estimate was we're going to knock 1 million tons off the corn and 1.7 million off the beans, and we didn't move the needle in either. And the USDA has made it obvious to us that watch the markets and try to analyze this data as much as we can, that they are not going to give in to pressure that they need to be in alignment with CONAB. I think their stance now has proven that they're going to say, you're going to have to align with us because we're sticking to our guns. And we've seen that happen before, but this is a huge discrepancy. And I got to think that the right spot is somewhere in the middle, but they're sticking to their guns here. They are not moving. They didn't make adjustments in Argentina and actually came in lower than the average trade estimate on the beans, but higher than the average trade estimate in the corn. But that was still 1 million ton reduction on the Argentine corn. So there was some alterations made in Argentina, but they are not going to align with CONAB.
Boy, you talk about stubborn. I mean, they just won't budge an inch when it comes to Brazil production. Why do you think that would be?
Well, they've been proven right a time or two in the past, where CONAB has come back later and adjusted higher to match or come close to matching what the USDA had been printing all along. And the other thing that the USDA is notorious for doing is making cuts after the crop year. So we'll see cuts in the spring for the crop that's coming out of the ground right now.
Okay, so from there, I guess the natural progression here would be to go from the crop production to the world ending stock, and
Yeah,
now compare that to the numbers that came out on the U.S. ending stocks.
largely not a big shift in corn and soybeans. And so there was no surprises there. But this was the one that got the wheat market today. And that's why we saw over 20-cent losses in various classes of wheat and various contracts, all three classes of wheat today. 5 million metric ton increase in the world ending stocks, according to this report, versus the trade expectation. The trade expectation was for no change versus last month. If you look into the previous month contract or column, it aligns with the estimate column. And so, analysts, traders weren't looking for any change, and they increased 5 million metric tons. The U.S. increase, the global increase, this is all hitting the wheat market pretty hard. And now you're making multi-month lows in all classes.
While the combines are rolling.
All the combines are rolling.
And from what I hear, so the harvest front, what I would call the harvest front on hard red wheat is well into Nebraska now, right?
Yeah. Actually, I just drove back from Denver. Basically went up I-76 in Colorado. A lot of harvest going on there, and then caught I-80, come across Nebraska, and yeah, there's wheat harvest going on all the way. I would call the I-80 corridor the border right now.
Okay. Generally, from what I've heard, things are surprisingly good, which is great to hear on behalf of the farmers. But my gosh, we've taken a big bite out of that market, though.
Oh, yeah. And maybe an unwarranted bite, but this is what we have right now. And we may start to see some quality issues come around, and there may be some fields that got skipped due to moisture. And by the time they get back to them, who knows what they're going to be pulling out of the ground. But, there's still some story that could develop here. But all in all, yeah, this has been a terrific year to be growing wheat, and bushels can heal a lot of market wound.
Now the numbers are out. The trade has had a couple hours to digest it now, and now we're going to be looking over the weekend here to kind of sort things out. A lot of things going on overseas, too, when it comes to geopolitical issues and tension. I guess at any moment we have to kind of be on standby because anybody could light that fuse at any moment,
I hope that it's something that can maybe be supportive to markets without having to inflict issues to whole societies over there. But yeah, this is just a chaotic time, and there's a lot of fronts where this could be shifted. And, obviously all eyes are open, and it is an election year. And so there's a heightened sense of geopolitical situations. And how are the candidates going to treat each of those situations? And those are going to be the questions that are asked as they move through the election year.
Longer term, though, I mean, now that we're just kind of trolling the lows, I mean, do you see much potential between now and maybe this fall for these grain markets to do anything?
I don't know if we have something that's going to be fireworks to cause any kind of a major rally. I also don't think we have much downside risk from here. Of course, either is possible, but I don't see the writing on the wall as to what it's going to be. This week we saw some really good widespread rain through the central and eastern corn belt that healed a lot of wounds at a time when they really needed it. And so you're talking a lot of areas that had anywhere from 1 to 3 inches, and then pockets of 2 to 4 inches of rain. And it wasn't just downpour deluges that ran off. I mean, these soaked in rains that came off of that Hurricane Beryl, or the aftermath of Hurricane Beryl. So the weakness this week was warranted. There's no question. I don't know if soybeans necessarily warranted the amount of weakness we saw this week, but this put pressure on the market, and now we have an immense amount of grain being sold because everybody is throwing in the towel. This is a time of year where if you need to make room, you're going to make it. You're going to get the grain moved. Basis levels are warranting some of these cash sales, even though the board has taken away so much. And mostly I'm referring to corn, not so much soybeans. But this has been something that we hoped wouldn't happen. And here we are. And I don't know if the good will offset the bad, but that's going to be the balancing act moving forward.
Well, and again, I would encourage our viewers, if they missed it, you might want to go back and check the podcast I did on Thursday, and that would be with Scott Irwin of the University of Illinois. And he talked about things from, east of the flooded areas of the West that we've been hearing so much about. Now, he talked about just what you were saying. In the central corn belt, he said in his career, he has never seen corn look that good.
Yeah.
And I've heard that from several farmers too in eastern Illinois.
Yeah.
That seems to be the sweet spot. They have the perfect growing season this year. They got just enough moisture. They've dodged most of the heat. But anyway,
And
just
they
a
also have
tremendous crop.
Chicago.
Go ahead.
And they also have Chicago.
True. They don't trade on the floor anymore, but boy, it used to be a big deal, right?
Oh, yeah.
And then you have the eastern areas that they were burning up. I had a comment, in fact, on our YouTube podcast a couple of days ago from Ohio.
Mhm.
And he said that for all intents and purposes, he said the soybean crop he thought was done. In other words, toast.
Yep.
And then Beryl came through and dumped a bunch of rain on him. And he said, I think it's going to make it now.
Yeah. Yeah.
And it's funny how that turns around. You can get a late rain on soybeans, totally change the year. I remember having a drought year and we got a heavy rain in August and shoot, they
Yeah.
made some of the best yield I ever had. And I
Well,
wouldn't have given very much for them,
yeah.
at the end of July.
They're a weed. I mean, you just throw a little water at them and they'll bounce right back. This is, I mentioned in my morning video today that we talk a lot about $1 million rains. This was a multi-billion-dollar rain that moved through that area, and it made that much impact to the market this week alone.
Is this changing your attitude about marketing the rest of the year?
All in all, yeah, I think so. I mean, I've seen enough good-looking crop that I know that we are not going to be, we're not going to be rocketing higher. I don't see any recipe for that. And so right now it's just a matter of what kind of retracement rallies can we get and be a little more aggressive selling into them. And that's where I stand with it. The wheat, I don't know if there's any hope for much of a rally in wheat at all. I mean, you're going to get something. It's just the nature of markets. They're going to trade, right? So there's going to be days where you're going to get 20 and 30 cent moves, and maybe for no reason. You could trade 15 lower and 15 higher in the day steady. That's just the nature of the market. But all in all, yeah, I'm definitely going to be a little more aggressive to sell shorter rallies than maybe I would have been expecting a month ago.
Okay, let's take a look at something a little more positive, and let's switch and take a look at the livestock trade. So as we headed into the weekend, I see mainly green on the screen there. It looked like feeders had a pretty decent finish to the week. But overall, what are your thoughts on how livestock performed over this past week?
It was a pretty poor week. I mean, the Friday green was nice to see, but I'm not sure it was any more than just some profit taking in the week, or maybe we were starting to hear some rumblings of some higher cash trade to finish out the week. But I didn't personally hear of any today, so I can't speak to that. But, to rewind a little bit, I mean, corn finished the week 9.25 lower. December corn 9.25 lower on the week. November beans are down 64.25 on the week. September wheat is down 39.75 for the week. And feeder cattle, they got beat up hard the first 4 days of the week, had a little rally back on Friday, and still finished 277 lower for the week. Fed cattle cash is going to be widely $2 to $3 lower for the week versus last week. And I don't know if that's going to be enough to attract profit taking from the fund longs in the cattle market. But that's definitely not a good thing, especially when you've had boxed beef down every day this week. So the beef's been lower, the cattle have been lower in the cash market. And then the futures, of course, followed suit. Maybe the biggest surprise to me was the August feeders down over $4 for the week.
On the hogs, did they just have a dead cat bounce or what?
Yeah, I think it was. They're still 72 cents lower in that August hog contract for this week. And, again, that could be nothing more than just a little positive to finish a short week. And by that, I mean, the shorts have the profit. So on Friday, you catch a little profit taking bounce. That may be all it was. But I did buy some hogs today. I just think 62 cent December hogs are a value, and maybe that'll be wrong, but I did go after some hogs today, and that's not something I do very often.
Well, Eric, I enjoyed talking with you again, and thanks for covering all the USDA data that came out in great detail. It's always very helpful, and I appreciate that very much. Hope you have a good weekend. That's Eric Relph with us. He is with Comstock Investments, and that'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bowling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.